Hey Bowtie Nation, Joseph Hogue here with the Let's Talk Money channel and a video I should have done a long time ago. Now Nation, investing in penny stocks is one of the most popular and profitable themes here on the channel. Hundreds of thousands of you have tuned in to get the best penny stocks and it's led to some amazing returns. Of the 17 penny stocks highlighted this year, we're up 44% on average and 123% on an annualized return. These have been great investments like Fastly, now up 369% since March when it was a much smaller company. Or Elevate Credit, recommended less than 3 months ago for a 53% return already. But I haven't done an all-in-one guide to penny stocks yet, a penny stocks for beginners video to help you understand these high-risk, high-return investments and set you up for success. That's what I want to do in this video, set you up with a penny stocks tutorial that will help you find your own stocks to buy. We'll start with the basic explanation along with the pros and cons of investing in penny stocks. I'll show you how penny stocks can make you rich and then show you the difference between long-term investing and short-term trading in penny stocks and what you need to know for each. Finally, I'm going to reveal 3 more penny stocks to watch whether you're a beginner or just want those huge returns. Now I'll leave a clickable index in the description below if you want to skip around a bit, but please watch this basic stuff as well. Nation, these are very high-risk investments and there are a lot of misconceptions out there. I want you to have the information that you need to be successful. I am excited to finally be doing this video. I thank you for watching and I want to send a special shout out to all you out there in the nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. Now first, of course, we need a definition of penny stocks, and I think this is going to surprise a lot of you out there. After every penny stocks video, I get comments on share prices of all the stocks, like why am I talking about penny stocks with stocks at $5 and $10 a share? The reality is there is no set definition for penny stocks. The most commonly accepted, though, is a company with a market cap, that's the total value of shares, under $1 billion. Now that's it. Stock price really has nothing to do with it. As an example, let's compare 2 stocks. Cyber Optics Corporation, ticker CYBE, is a $217 million company with just $61 million in annual sales, so a very small company, yet its shares trade for almost $30 each. Now on the other hand, $2.1 billion makeup giant Coty Inc., ticker COTY, with nearly $4.7 billion in annual sales, but a stock price under $3 per share. You certainly wouldn't call $2.1 billion Coty a penny stock. It just doesn't have the fast growth or the flexibility we're talking about when we usually talk about these kinds of stocks. The fact that its share price is under $3 is really simply a fact that it's issued 763 million shares, while Cyber Optics has issued just 7.4 million shares issued. So always keep that in mind when you're looking for these penny stocks. Price really means nothing. What you're looking for are these smaller companies with the faster sales and earnings growth, companies with the flexibility to beat out the larger competitors in those trends. And pros of investing in penny stocks are the opportunity to get in on that next big thing before it's $2 trillion Apple or before the 4,000% return on shares of Netflix over the last decade. Investors also like the excitement of investing in penny stocks and the fact that you're supporting smaller companies as they grow. Now it's not all rainbows and unicorns though. There are some downsides to penny stocks as well. First is just the volatility and the reverse of those big returns. Even on those solid returns over the last year, 7 of those 17 penny stocks are in the red, as much as 18 and 23%. Also though, the market for these small companies, especially the ones trading on the pink sheets, is rife with fraud and scammers. These companies may not have the same reporting or regulatory requirements compared to those larger companies. There's typically less information publicly available and just few analysts covering the shares, so there really isn't that depth of analysis for investors to look at. Nation, this was the bulk of my job as a venture capital analyst and then later for private wealth. Finding these small pre-IPO companies or the new penny stocks and then digging into the financial statements to really separate out the best and make recommendations. But that extra work does pay off. The average annual return on venture capital and angel portfolios is around 27% a year, nearly 3 times the market average. Even the small cap stocks in general tend to beat the market, with that Vanguard Small Cap Growth Fund beating the S&P 500 over 43% over the last decade. And penny stocks can make you rich. That outperformance on the small cap fund would turn $200 a month into $187,000 over 20 years, 80 grand more than investing in the broader stock market. But investing in penny stocks, those smallest of the small cap companies, could grow that portfolio to over $1 million in the same amount of time. But to do this, you have to understand the difference between penny stock trading and investing in these companies. Either can make you rich, but confusing the two is just going to leave you in the poorhouse. Now, trading penny stocks means taking advantage of those short-term trends and taking your profits within a few months at the most. Here you're buying into these stocks on the potential for a news release, on technical signals, or just that short-term valuation. Investing in penny stocks is much more about that long-term view on getting in on good companies before they become the industry leaders. Here you're looking for a competitive advantage in a product and a large market for sales growth. So in that short-term penny stock trading idea, you're looking for a quick return and not necessarily a company you think can change their industry. Here you're watching for stock prices that break above their 50-day moving averages, move into oversold conditions, or those with valuations below their historical averages, or ones that might benefit from recent news or trends. In that long-term investing strategy, on the other hand, you're looking for companies with an innovative product that's changing its industry. The company is growing sales at 20% or more a year for consecutive years and has a long runway in a large market. You're looking for companies that are not only growing sales, but are also improving on those costs, so making more money and becoming more profitable to build towards those positive earnings. And this type of long-term investing in penny stock companies is where I like to play. It's where I spent my time as a venture capital analyst, and it's actually less work than that trading strategy. With penny stock trading, you have to constantly be watching your charts, finding new targets, and jumping in and out of stocks. With that longer term view though, you're just investing in a handful of really great companies, holding on and then riding 2 or 3 of those to 5 and 10x returns. Now with this, I want to highlight 3 stocks that I've been watching, but I also wanted to share the penny stock screener that you can use to start your search. So I usually start with a screener like this one to narrow my stock list down to maybe 10 or 20 stocks to research further. To start, I'll use a simple screen in the Webull app to narrow my list of penny stocks. I can click through to Markets in the menu, then access the stock screener, and you can save these screens here for easy access in the future. Now the first thing I do is just narrow the market cap. That's the company's market value of all the shares available to less than $100 million, which really gives me the smallest companies available. Now like we talked about, small cap stocks or those penny stocks can go all the way up to $1 billion in market cap, but anything over a few hundred million is already going to have a lot of analyst attention. So I'll then go into volume here, and this is the average number of shares traded on a daily basis, so a great measure of the market interest in that stock. We're trying to find companies that the market really isn't wild over just yet, so we'll narrow this down to 100,000 shares traded on a daily basis or less. I'll also use this ROA screen, that's a return on assets, for one last factor on the company performance. Here I'm not trying to kick out too many companies, but I do want to focus on those with a positive return on assets. And as you're using the screener, you can see that it updates below with the number of stocks that meet the criteria. You can use some of these other technical indicators as well as some of the other fundamentals just to narrow your list down a little bit further so you don't have so much research to do. Now besides the stock screener, I really like the Webull app for its other features, like the stock simulator that gives you $1 million to test out your ideas in paper trading. I'll leave a link in the video description below. Check it out, and the platform is going to give you a free share of stock worth up to $1,600 when you make your first deposit. I'll be putting all 3 of these penny stocks into my Webull paper portfolio to track them before I invest. First here is $125 million Zovio, ticker ZVO, trading at around $3.90 a share. And this is one that we first recommended in May at $2.16 per share. Zovio shot up to over $7 a share for a 224% return, but has since come back down and could be another great opportunity to get back in. The company is a leader in that education tech space, and I was surprised in May looking at this company that it hadn't blown up already. Zovio partners with colleges and universities to deliver online and connected solutions to the traditional way of education. Now we're talking online testing, faculty management, software that is going to be in high demand over the next year. So of course, with the importance of all this during the lockdown, it was no surprise when the shares surged to over $7 a share after that second quarter earnings report in August. The company reported $7.7 million in operating income for the quarter, a $12 million increase from the operating loss of $4.8 million last year. The company also swung to a net profit of 24 cents per share, more than double the 11 cents per share that analysts had been expecting. Their shares have come down since that peak, but this is still a strong long-term play. Traditional schooling has started to come back, but a lot of these schools are either in the mixed approach or having to shut back down as infections break out. And on top of that strong income growth, this one has a pristine balance sheet with over $76 million in cash reserves against just $10 million in debt. So even on that higher $125 million market cap, we're still talking half of this stock's value is in cash. The sole analyst covering the shares here, Alex Paris over at Barrington, has a target price of $10 per share, and I definitely think it can get there. This next penny stock, Gatekeeper Systems, ticker GKPRF, is the smallest of the group, one we highlighted recently in a stocks under $1 per share video. Now, Gatekeeper is a $55 million provider of tech hardware and video solutions to the public and private markets. I really like this market, and in fact, the company has a hand in some of the best trends I'm watching. Now, besides providing the video capabilities for smart cities and security, its system is AI-driven and combines video analytics to make better decisions. Its platform as a service model will also mean consistently growing revenues as cities adopt to that IoT revolution. Sales have grown at an 11% annual pace over the last 3 years, but have booked growth of 26% this year, so some real momentum there in the top line. It's also cash positive with a $1.75 million in cash against just $240,000 in total debt. So all the cash availability this company is going to need. Now, one short-term catalyst I see in the stock is this intelligent temperature sensor system, an automatic detection system that scans the public for body heat that could signal COVID-19 infections. Now, this thing has a huge market, even after the current pandemic, and could boost sales even further. This next one's a little larger at $596 million market cap, but still in that penny stock size. Magic Software, ticker MGIC, and this one actually pays a 2% dividend yield as well. Now, that's not a huge dividend, but it's extremely rare for these kind of small, faster growing companies to pay any dividend at all, so it's just nice to get something while you wait. The company is a global player in that software development, including app development and IT infrastructure design. It's helped over 3,000 clients in North America and Europe and has a great revenue outlook. Now, the software application industry is expected to grow by 16% annually through 2022, and the company is banking on that for its own growth. Sales grew by 14.5% last year and 12.3% in the last quarter to over $348 million on a 12-month basis. Now, all you in the nation know I love looking for that cash survivability of these companies. And for that cash availability metric, the short-term assets here are 3 times the short-term liabilities, and the company has $79 million in balance sheet cash against just $39 million in debt, so an excellent cash position. 3 analysts here with price targets, and every one of them above the current share price, from a low of $15 per share to as high as $17 each over the next year. Click on the video to the right for a step-by-step to how I practice stock trading without risking my own money. How to trade penny stocks risk-free. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.